Alrighty, what is going on, guys? Welcome back to a brand new review. Today, I'll be talking about how I'm up a little bit over $28,000 trading today and kind of going in depth about my bias, the trades I took, and exactly why. So, let's get into it. So, for today, it was another day in where we saw just beautiful continuation off the open through New York. But before we get into New York, I kind of want to go over a trade that we took last night, and it was an Asia long. So I kind of end up coming back post 6 p.m. through Asia with the chat with the community to be able to look for a trade. And the thesis behind this trade right here specifically is being how bullish I was through New York yesterday, and how Asia was trading off the open. I thought it was a good idea that New York, or excuse me, Asia would look to most likely see continuation, and that was kind of the thesis here. And so what you end up seeing me post here is I say, good evening, folks. Liking Asia interest in higher. Looks like we're building up for the New York move. If we invert this 5-minute bearish FEG and turn it to a bullish IFEG, I like the 0.5 hour stab on long. Stop swing low, targeting targets from the game plan posted this morning. If you go back to yesterday's review, you could see that we had a game plan with specific targets in mind, and these targets are the same targets that I ended up utilizing for this Asia trade that we ended up taking. So we come down here, and I end up kind of talking about the fact that I did like the setup. The only weary part about this trade was that there was no major liquidity taken off the low that we put in here through the swing low. I talked about how I felt had price come down here a bit lower and seen this internal low here get taken out, which was an internal low that tapped a 15-minute gap and also tapped a 30-minute gap and rebalanced. I felt this internal low sell side sweep would have been really good for the trade, and conviction in the trade as well. You see me post a visual here and talk about that. That was kind of the look I wanted. And then we eventually get it. We see sweep of the low. Then we see price come back up, and we eventually go invert off this trade. What we then see price do through Asia is start to slow down a bit more. I was expecting a slower trade, obviously, because Asia typically moves slower, if you don't know. And so, yeah, we end up holding the trade, and I go half risk. Obviously, I have my risk obviously explained to the community on the trades, and we end up taking the trade, and we eventually go break even stops. The break even position on this trade here was the Asia highs that we initially put in. So these were the Asia highs. Come up here, take that out. We go break even, and our take profit goal intent, as we said, was the game plan target, which was 26,050. That was an ideal area of interest. Um, we see price more so look to trade higher solely initially, but then we see London open, and then we see London essentially sell off, and we see London come back down and tag us down, break even. So this is the trade here specifically. Again, we take entry on Lucid, and we end up seeing prices go, and eventually come back down here, and we end up seeing price take out that break even zone. A bit of a bummer, and we had this happen sometime last week. I don't recall when, but we had a review kind of discussing this. How many people would have a trade like this, guys, and they would get tilted? They would get upset. They would revenge trade. They get greedy off the fact that they lost the P&L that they once had that was unrealized in this trade, right? How many of you guys would do that? It's important to know that I still have these type of trades. Great traders still have these type of trades where they see trades go in the money, and then we see price come back down, and we see price go break even, right? What's important, the difference, as I said last week, is the difference between a pro and an amateur is an amateur reacts to it. They feed into it. They feed into their emotions, and they're psyched all fucked up, right? But what we do, right? What I do, what I intend or usually do is I just simply move on, right? Because at the end of the day, stop, TP, or break even. One trade is one trade. One trade should not make your entire life. Your life shouldn't be depending on it, right? Your fucking future goals shouldn't be depending on one trade. One trade is simply one trade. We came down here and went break even. Sure, it was a little annoying that we ended up seeing the slow trade come up here and give us some profits initially unrealized, but then come back down and hit us break even. That's fine. You can have your frustrations, but it's important to make sure that you stick to your system. And once we exited this trade, right, once we had seen price come back down and hit us break even, our system was not telling us to take anything here. And I think it's important that you guys see that and stick to it, right? Because how many times do you supposedly follow a system and then you see price come back down, hit your stop, hit your break even, and then you freak the fuck out and then you start taking random bullshit trades, right? Don't do that. Stick to your plan, right? You want that steady growth, right? That's how trading should be. That's the only real answer to trading, right? You're going to have your ups and downs naturally, but you want that steady growth over time. So once we ended up seeing that, price ended up coming back down here, taking out um, our break even. We ended up seeing London kind of consolidate initially, but then we were met with a large sell here through our New York Open, where you see our opening range move be our move into our London lows. Come down here, take out London lows. We see price on sell side get taken out off the open. And if you guys don't know what the ORM is, it's the opening range move. We see price come down here. We see price take the area of low. But what's the most important in here, which helped me alter my bias, because initially, obviously, I was bullish through the Asia trade, was how we traded off the open through our opening range move and how we invalidated consecutive higher time frame PD arrays. So if you go to the hourly time frame and you see price off the hourly time frame, not only do we invert this, we invert this gap as well, and we see price furthermore trade lower and lower and lower. So for me specifically on the hourly, same thing on the 4 hour, right? We had a 4 hour array, which we came down here and completely disrespected it as if it was never an array in the first place. A 4 hour gap. That tells you how bearish price is. And in alignment with how consistent and how displacive price was here in terms of follow through, it kind of made it clear for me that I wanted to be bearish. Because again, chat, we inverted that 4 hour like it was never there. We inverted 2 hourly gaps like it was never there. We came down here off the opening range move and took these overnight lows and lows through London and Asia like it was never there, right? So when you see price that consistent and invalidating all these areas and still looking for interest in lower, that clearly tells you that draw is lower. So from there specifically, all I did was zoom out and through a higher time frame, marked out any area of interest which was large, right, in terms of array or a low or a high. There happened to be no lows here, so I ended up utilizing the next best thing, arrays. We had a 4 hour gap fill here, which is exactly the low of day that we have put in place. And so far at the time of this recording, and we also had an hourly gap fill right here, which we see price come down here and look to shoot. So that was more so my targets coming into the open off after the initial move. And so kind of timing it together, bias was determined here, right through a higher time frame look and through the opening range move. And then you also see price be very displacive in terms of follow through. So it's kind of like we're seeing what yesterday did, except downside today. So a pretty clear move. And then in terms of our trade here specifically, what I will say before we get into our trade, I do think the best entry model for today specifically, and a lot of users in chat, they surprised me today. They took the trade on their own, and they ended up taking this 1 minute gap that came back down here and saw invalidation. You're like, you might be like, Lanta, like, what's this trade? Well, clearly after the opening range move, after identifying the opening range move and seeing how bearish we were and seeing what our targets were on this trade, and seeing the consistency in price, I don't want you guys to forget and let that go over your head, the importance of price action and the importance of it kind of validating your kind of draw. Because it's one thing trying to anticipate where price will go, but it's another thing being reactionary as well. So if you could, if you just make up a random level in your head, you're like, I want price to go to here. Like, sure, you could have that, thought, but if price isn't showing you that it wants to go to that level, it's not going to go to that level. And so you see price, right? We have these optimistic areas of draw in terms of downside, but what's important here is you see price equally showcase the same type of want into that draw, right? Because if price was consolidating in this range that we developed through overnight lows, you think I'd really have my draw intended into these areas of liquidity? No, right? If price was chopping within overnight range, you would never see me have that area of interest because price is not telling me it wants to do that yet. So we end up seeing price down here, or price come down here, and you see clear displace. We see this 1 minute bearish gap come back up here, go and turn into a bullish inversion. But then you see price come back down here and you see price invalidate that bullish inversion, which gives us conviction and us looking to draw lower. We did put it in a good initial low here off this hourly gap and 4 hour gap entry. So I can understand, some people maybe potentially being a bit weary here, but I felt, as we always talk about, chat, whenever we take a high or a low, there's always one of two reactions. We see the retrace, right? Say we take a high, for example, we take the high, we retrace and put in a higher low and look to see continuation. Or if it's a low, we come down here, right? We take the low like we did on the hourly and the 4 hour gap. We take the low, retrace, put in a lower high, and then look to see continuation, or we just look for reversal. You clearly see price take the low, come back up for the retracement, put in a lower high, and come back down. And once we ended up seeing price invalidate this 1 minute gap, go invert or go invalidation, I think this was fair and appropriate to take this trade because you see all the components that we wanted on this trade. So beautiful take for anyone in chat that took that. Beautiful. In terms of our trade here specifically, it was the same intention, same draw idea, just a bit lower of an entry. We ended up taking a 1 minute inversion, right? And you kind of see me post this here. Ooh, that's very blurry. I say eyeing potential, as mentioned, liking lower draw and the 4-hour gap fills. If we can see the 5 minute, or if we can see the 5 minute gap tap, then send down, inverting this 1 minute gap. We'll look to have a jab. This is exactly what I was looking for. What would have made this trade, I feel like A plus plus, is had we seen this 5 minute gap get tapped into. What I've fancied a bit more as of recent is like a bit of a multi-time frame alignment entry, as opposed to just like a 1 minute entry. I like maybe a retrace, a 5 minute gap tap like this, displace the 5 minute gap tap. Beautiful rejection, come back down, invert the 1 minute displace that we had back up, and then we take entry. We didn't see the 5 minute gap tap get taken here. We still took the trade because, again, with price, with entry model, entry model was the weakest thing here, which is a good thing in a way because price was so bearish and our draw was so clear. We end up taking entry here. We see price come down. We see price go invert. You end up seeing me say I am short. We end up taking this trade on our accounts, executing them live on Lucid. And here was the entry. You see confirmation at 11:06, which is my time, which would be 10:06 a.m. Eastern Standard Time. We take our entry off confirmation. We take the trade. We see initial consolidation, but then we see the price, or we see price eventually come back down here, and we see price hit that take profit goal. You see me meet consistency, and you can see our literal low of day at the time of this recording is literally where we ended up exiting this trade, because you see price perfectly draw into our conviction and you see our targets get smashed. So beautiful trade overall. That's the day. We took entry. Again, it would have been A plus had we seen price kind of tap this 5 minute gap. Again, the stop placement on this trade here was a 5 minute gap CE because I wanted to see price come back up, tap the entry, and still showcase a very bearish displace back down, go invert off the 1 minute gap, and then boom, take the trade. But we end up seeing price come back down here, giving entry regardless. Still good conviction trade. And we end up seeing price come down here, run the TP for about a 1.3 R on the day. So I'm not up crazy, but from a technical aspect, I did think we did a good job today. And so yeah, that's pretty much the review. Hope you guys liked it. On to the next one.